Hello and welcome to Between Two Electrodes, an educational series for energy professionals. I'm your host, Jennifer Alfson, Product Marketing Manager at Fluence. In each series, I'll interview subject matter experts on interesting industry topics. In this series, we're going to focus on energy security in Europe. I'm joined today by Lars Stephan, Senior Manager of Policy and Market Development at Fluence, and our special guest is Gerard Reid, co-founder of Alexa Capital and co-host of Redefining Energy podcast. Well, thank you for joining us. Let's jump into our topic at hand. The European energy crisis is not just about security of supply, but also about affordability. How can storage support energy affordability?
When I look at that, I think there is always a trade-off. And the trade-off is, do I build grid or do I build storage? And, I look and I say, in a large amount of cases, storage is the cheapest way to do it. So just take a very simple example. You want to put in a big EV charger. Well, you might need to put in a new cable. So actually, maybe the best thing to do is leave the cable that's there and actually put a battery in beside that charger, right? Now, the issue that you have is that I would say that the incentives are not in place to enable storage to be chosen over grid. And I think what will have to happen going forward is we have to take a very systemic view in and around how we incentivize and pay for this energy transition going forward, because otherwise we'll just make poor economic decisions.
And what is the trade-off between energy security and affordability in the short, medium, and long term?
Well, energy security is expensive, right? So the more secure you want to be, the more expensive it is, right? So if you want to ensure that your system is foolproof in terms of being able to stay 24/7, resist cybersecurity attacks, et cetera, that's expensive, right? So the more secure you want to have the system, the more expensive it is. However, I'm quite positive about this in the medium and the long term, because the medium and the long term is we're going to have to rethink the way the energy system works. And that means, for me, two things that are really critical. One is digitalization, and the other one is storage. And if we actually put these two in place, I actually believe that we can speed up this energy transition and lower the cost of energy to our customers. And why is that important? Because, well, if you're an industry and your electricity or your energy prices are higher than, say, the United States, then you know what's going to happen to industry. It's going to move, right? So it's a really, really critical thing is to make sure that you have low cost energy across the continent of Europe. And I think we can do it.
And Lars, what is the role of energy storage in the energy cost intervention measures?
Yeah, so I think there have been really a flurry of policy actions this year coming out of Brussels, but also of member states. And storage has always been a part of it to most extent. So in the REPowerEU package, which was like the first legislative package in April, energy storage was recognized for their role in integrating renewables. And it was even defined together with renewables as an asset in the overriding public interest. I mean, take that, renewable assets and energy storage in Europe is now in the overriding public interest. What does it mean? That is not yet that clear, but it will be related to faster permitting processes in Europe. A second big market intervention that we had was about capping in what we called inframarginal profits from generation technologies. So basically generation technologies who have a very low cost of producing electricity and now getting the very high prices. And here price caps were established and energy storage was explicitly excluded from the price caps, because putting a price cap on energy storage doesn't make a lot of sense, because then it can't move energy around anymore and replace expensive plants at the end of the merit order, replace the expensive gas plants. So I think energy storage is in the mind of policymakers as a tool to solving the energy crisis in Europe.
How does energy storage reduce costs in wholesale markets?
Yeah, that is a very interesting one and also a bit complex, but let's walk through it. So first of all, in the recent crisis, we've seen energy storage starting to participate much stronger in wholesale markets. It became an important application and revenue stream, which is quite exciting, right? So what is the wholesale market actually? It means a spot market on which electricity is traded, typically for the next day, the day ahead, or the intraday auction. The spot market, it works like a market. You have supply and demand. So supply is the generation of electricity and demand is the consumption of electricity. And the spot market also has like a price setting nature for other trades that happen in the energy system. So how does energy storage fit in? What energy storage does, it charges electricity when it's cheap. That is typically when there's a lot of renewable in the system or when the demand is very low. And then it will discharge or release electricity when prices are very high, which is typically when there's not a lot of renewables in the system or when demand is really high. And doing this, there are two important leveraging effects in the system. So first of all, when prices are high, the supply curve is typically steeper, which means for that producing an additional megawatt hour of electricity becomes increasingly more expensive. That means when energy storage charges electricity, so creates more demand in the system, the price goes up by a little. But when energy storage discharges electricity, the price goes down by much more than it did when electricity was charging. So in an overall sense, the cost over the whole day is going down. And an important element is also, you can just have a very little, maybe 100, 200, a gigawatt of energy storage at the end of the supply curve. But it will set the price for all energy that is being transacted in the same period of time. To put it in perspective, I did once like a little back on the envelope calculation looking what pumped hydro does in the German system. So on August 16th, I just played around a little with the demand supply profiles in the energy market, looking what would happen if we take 2 gigawatt of pumped hydro out of the market. What happened was that the price when electricity was cheap went up. It went up by around 140 euros per megawatt hour. But when cost of electricity was high in the evening, the price actually went down due to pumped hydro. If pumped hydro wouldn't have been in the market, the cost would have been not 600, but 1,200 euros per megawatt hour. And in total, like 2 gigawatt of pumped hydro storage that day in wholesale markets saved German consumers around 36 million euros for the consumers. And that really shows the huge leveraging effect and the social economic benefit that energy storage and other flexibility technologies have by making the system overall more efficient.
Thank you so much, Lars and Gerard, and really for explaining how energy affordability differs from security of supply and the role of storage in energy affordability. Please like and share with your colleagues to help us share the knowledge, and you can also subscribe so you don't miss other upcoming series on Between Two Electrodes. Thank you and have a wonderful day.